Hey everyone, welcome back to Corporate Decoder, the place where we decode the complexities of corporate filing so you don't have to. And today's report might just require some extra strong coffee because American Airlines is about to drop some new metal and financing plans on us. Alright, strap in folks because we are diving deep into American Airlines' latest SEC filing. The Form 8K, which is basically the company's way of saying, hey, something important just happened. And in this case, it is all about securing a hefty sum of money to buy a whole fleet of new planes, a transaction that is pretty darn significant for any airline. First off, let's break down what this filing is all about. When a company like American Airlines Inc. embarks on a big financial move, it needs to tell the Securities and Exchange Commission, or SEC for short. This particular form, the 8K, is like a public announcement system telling us immediately about major events that shareholders would want to know about. Think of it as the company's breaking news section. The report is dated November 12th, 2025, and that gives us a clue that the main event we're talking about happened on or right around that date. This isn't some ancient history, it is fresh news. Now, for those who might not be following every single announcement, American Airlines Inc. is the registrant here, meaning it is the company making this filing. It is one of the world's largest airlines, and this kind of deal directly impacts its ability to grow and serve its customers. As for their corporate structure, they are incorporated in Delaware, a common place for many large companies to set up shop. And of course, this filing is being made with the SEC in Washington, D.C., the heart of financial regulation in the United States. Okay, this is where the action really begins. Item 1.01 entry into a material definitive agreement is the section that tells us about a really important deal. And what is this deal, folks? It is a note purchase agreement, which sounds a bit dry, but trust me, it is the engine powering a massive aircraft acquisition. So on November 12th, 2025, American Airlines and a company called Wilmington Trust Company, who is acting as a trustee, which is like a guardian for certain newly created funds, entered into this crucial note purchase agreement. This agreement is the blueprint for American to get its hands on over $1 billion worth of new planes. We are talking about a principal amount of $1,104,534,000. That is a lot of zeros and a lot of airplanes. What kind of planes are we talking about? Well, they are getting 12 new Boeing 737 MAX 8 aircraft scheduled for delivery by the end of January 2026. That is a workhorse of the skies for many airlines. They are also bringing in 2 new Airbus A321XLR aircraft, which are set to arrive by the end of December 2025. These are impressive long-range aircraft. Adding to the fleet, 3 new Boeing 787-9 aircraft are expected by the end of December 2025 as well. These are the Dreamliners known for their efficiency and passenger comfort. And rounding out this massive order are 8 new Embraer AJ755LR aircraft due by the end of March 2026. These smaller jets are great for regional routes. Together, these are called new aircraft, and they and any existing owned aircraft are collectively referred to as aircraft. Now let's talk about how they are paying for all this. The deal involves issuing equipment notes in 2 series. Series A notes will carry an interest rate of 4.900% per year, and Series B notes will have a slightly higher interest rate of 5.650% per year. The total principal amount for Series A notes will be $883,625,000, and for Series B notes it will be $220,909,000. These notes essentially function as loans backed by the planes themselves. So who is buying these notes? The trustee will purchase them using money generated from selling something called Class A and Class B pass-through certificates. Think of these certificates as investments that pool money from investors to fund the purchase of the equipment notes, which in turn are secured by the aircraft. It is a structured way to finance big-ticket assets. What happens with the money before the planes are fully paid for? Well, the money from selling these certificates is placed in escrow. Escrow is like a secure holding place for funds, ensuring everything is in order before the final transaction. This is managed through specific escrow and paying agent agreements, all dated November 12, 2025. The actual money is then deposited with Sumitomo Mitsui Banking Corporation as the depositary. Natixis New York branch is also involved providing liquidity facilities to ensure that interest payments on these certificates can be made even if there are short-term cash flow issues. This adds another layer of security to the financing structure. The interest on these equipment notes and the escrowed funds will be paid out twice a year on May 11th and November 11th starting in May 2026. This regular payment schedule is typical for such financing arrangements. The principal payments, so the actual repayment of the borrowed money, are also scheduled to be made semi-annually starting May 11th, 2026. The Series A notes will be fully paid off by May 11th, 2038, and the Series B notes by November 11th, 2034. This means it is a long-term financing deal stretching over a decade and a half, for some parts of it showing the long life of an aircraft investment. Of course, with any loan or financing there are conditions. The maturity of these notes can be accelerated if American fails to make payments on time or if certain other events occur like bankruptcy. This is standard practice to protect the lenders in case of financial distress. The equipment notes for each plane will be secured by a lien on that aircraft, and they are also cross-collateralized, meaning all the planes being financed under this agreement serve as security for the entire debt pool. These certificates we talked about, the Class A and Class B ones, they were registered for sale under a shelf registration statement. Think of Form S-3 as a pre-approved way for well-known companies to quickly register securities they plan to sell over time. This filing uses file number 33-26999. 0-01. The actual sale of these certificates was handled through underwriting agreements dated October 28, 2025, with investment banks like JP Morgan Securities LLC and Deutsche Bank Securities Inc., acting as representatives of the underwriters. These are the big players who help sell the securities to investors. Now we move to item 2.03, creation of direct financial obligation. This section essentially confirms that American Airlines has entered into direct financial obligations. We've already covered the details in item 1.01, but this is the section that formally flags the creation of new debt or financial liabilities. It reiterates that the company is taking on significant financial commitments through these equipment notes and related agreements. Finally, we hit item 9.01, financial statements and exhibits. This is where the company lists all the supporting documents for the report. It is like the appendix of a book listing all the important contracts and legal opinions. Here we see Exhibit 1.1, which is the underwriting agreement we mentioned earlier, dated October 28, 2025. It details the terms under which JP Morgan and Deutsche Bank agreed to help sell the securities. Exhibit 4.2 is a trust supplement number 2025-1, dated November 12, 2025. This document essentially amends or supplements an existing pass-through trust agreement from September 16, 2014. It is part of the legal framework for these new pass-through certificates. Then we have Exhibit 4.9, the most important one we discussed, the note purchase agreement dated November 12, 2025. This is the core document outlining the terms for purchasing the equipment notes connecting American Airlines with Wilmington Trust in its various roles as trustee, subordination agent, escrow agent, and paying agent. And finally, for this section, Exhibit 5.1 is an opinion from Latham and Watkins LLP, who are acting as special counsel to American Airlines. This opinion likely provides legal assurance regarding the transaction. And here we have it, the signatures. This is where the company officially signs off on the report. The signature of Devon E. May, Executive Vice President and Chief Financial Officer of American Airlines, Inc., dated November 12th, 2025 here, confirms that the company is formalizing this announcement. Now, looking at this massive deal for American Airlines, what is the big picture? Obviously, acquiring such a large fleet of new generation aircraft, Boeing's and Airbus's latest models, is a huge strategic move. It means they are investing heavily in expanding their capacity and modernizing their fleet, which is crucial for efficiency, fuel savings, and passenger experience. This signals confidence in future travel demand. The financing structure using pass-through certificates and equipment notes is a sophisticated way to raise over $1 billion. It leverages the value of the aircraft as collateral, which is good for securing favorable interest rates. The fact that they've already secured the underwriters like JP Morgan and Deutsche Bank and have these agreements dated back in October suggests that this deal has been in the works for some time and was well planned. The dual series of notes with different interest rates likely reflects different risk profiles or repayment schedules for different investors. The clear scheduled payments and maturity dates demonstrate a robust financial plan. However, anytime a company takes on over $1 billion in new obligations, it is worth keeping an eye on its overall debt levels and its ability to generate consistent cash flow to service that debt, especially in a volatile industry like aviation. The dependence on future aircraft deliveries also presents a risk if there are production delays from Boeing or Airbus, but the filing mentions potential substitutions, which is a good contingency. In conclusion, American Airlines is taking a bold step forward by securing these new aircraft and the financing for them. It shows ambition and a long-term vision. The complexity of the deal highlights the financial engineering required in the aviation industry. While the move is positive for growth and modernization, investors should still monitor the company's debt management and operational performance closely. Alright, that is our deep dive into American Airlines' latest move. What are your thoughts on this aircraft acquisition and financing plan? Do you think it is a smart move for the airline? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe to Corporate Decoder for more in-depth looks at corporate finance and strategy. And don't forget to join our Discord community linked in the description for even more discussions. Thanks for watching, and we'll see you in the next episode.